Thank you for taking the time to watch this webinar, How to Complete the Homework for the Budget Impact Workshop. Before we go through what the homework actually is, it's worth explaining why it's necessary. What you can see on the screen in front of you is a spreadsheet called Tax Over Time, and this is going to be used as one of the main tools at the workshop to try and help you understand how the recent summer budget changes are going to impact on your personal tax position. And you'll see across the top there are tax years, so starting beginning of April, ending in March, and then you can input the various elements of property income that you might have. You can input other sorts of income, salaries, pension, and right down the bottom, what the spreadsheet will do is calculate your income tax, and you'll need one of these for each individual. The problem that the homework is trying to solve is that this spreadsheet is based on tax years, but your HMO purchases won't have been based on tax years. The purchases won't coincide with the beginning of April. And if you think about what's shown on the HMO analyzer, actually what that's doing is showing you a combined position for the individual franchise partner and the limited company. Income tax is just about the individual, so what we need to do is strip out the limited company element. But because you're putting profits from your business into your limited company, how you extract money from your limited company, whether it's through directors' loans or through dividends or possibly through salaries, is important as well. So we also have a second spreadsheet that we're going to use at the workshop, which is called the Limited Personal Split. And what this has got, again, we've got tax years across the top, but you've got the elements of the limited company profit and loss account, which will enable you to calculate your retained earnings, and particularly dividends. It will also calculate your director's loan account. It will show you how much cash you've got in the bank, and then down here we've just got the individual elements of the HMO analyzer. So what we're trying to do is really have two workbooks that are of value. We've got this limited company split, which will tell you when your director's loan is going to run out, how much cash you can take out of the business, and how you might do it. And then we've got this tax over time spreadsheet so that you can put those numbers in there and see how your tax position, or see how your personal tax is impacted. So if we go to the lease model first of all, the data that you need to input in here should either come from your HMO analyzers or possibly from your personal tax return, but let's just walk through that. So let's say that this franchise partner joined on the 1st of April 2010. We put in a franchise term of 5 years. That's important because at some point in the future you may not be paying MSF, and the calculations can strip out the effect of MSF if the spreadsheet knows how long the franchise term is. Completion date, let's say that was 31st of July 2010. 3-month refurb. This is the repairs element of the refurb, so think back to boot camp and remember that what you pay your builder for refurbishing a property is split into capital and repairs. We're looking for the bit that the limited company is paying for, so that's the repairs element. Let's say it's £40,000. Ready to rent, £7,500. Total monthly income. This you can take straight off your analyzer, and this is rental income less voids but plus laundry and admin fees. So that's 3,600. And you notice that I'm just typing into the dark coloured cells. The pale coloured cells will populate automatically. So we'll come to mortgage and own funds further down at the bottom. Utilities 550, and maintenance 106. If we come down now to the mortgages, so the mortgage automatically starts on the same day that the property was purchased, and let's just say that the first mortgage was for 18 months, so the end date is calculated automatically, and that was at a cost of 789. Mortgage 2 begins when the first one ends. That was for 21 months at a cost of 1,242. And then the third mortgage was for a period of 143 months. And you'll see here that this check for at least a 15 years data has gone green, whereas it's red over here. That's just so that when you input this, there is enough data in the spreadsheet to project forwards, because the last year on the tax over time spreadsheet is 25-26. So mortgage interest was 1,342. Rents over here. So this is the rent that the limited company is paying the franchise partner. So the first deal was 4 years, so 48 months at a rent of 650. And then there was let's assume that it was the same going forward, so we'll say 132 months, and 132 plus 48 gets me to the 15 years that I need. The rent there was £1,400. I've got at least 15 years of data. Then my own funds. Now this is assuming that the own funds changes with the mortgages. And own funds, this is where you've used either a release of equity on the main residence, or perhaps by remortgaging another HMO. So this is straight out of the straight off the HMO analyzer, and the interest here to begin with was £363, and then on the first remortgage it dropped to 202. I'm just going to assume that it's the same there. So all of those cells are populated, and you should be able to check back to the gross profit that you've got here is the same as that you'd have on your HMO analyzer. So then you go to the tax years tab, and what you'll see is that the spreadsheet, based on the dates that you entered, has created a personal and limited company split. Let me just make that bigger. So you can see that you've got tax years across the top, and a personal and a limited company split. And all you need to do is copy these cells. So highlight them, copy, and then we go to the limited company split spreadsheet. We go to the data entry section, and these blue ones are all for the lease model. And what you do is you highlight the first cell there, and you do edit, paste special values. The reason I'm doing paste special values is just to avoid creating links between spreadsheets, and then if you move things around through the process of doing this, you don't break the links, and you're probably not going to be changing this data, so I don't think it's going to be an inconvenience, and much less than breaking links. So that's the personal data. If we go back to the limited company, again we can highlight all of that, copy it, switch back to the limited company split, go to the first cell, and again edit, paste special, values. And so that's put that first house in. And what you do is fill in a section for each house under the lease model. So if you went back to this lease agreement spreadsheet, you'd save this one under the first house name, and then start a second spreadsheet for the second house and paste all the data into house 2 in here, and then house 3 and all the way down to house 6. We've also got a section for the service agreement model, and the allocation of costs between the FP and the limited company are different. So let's try putting the same house into a different spreadsheet. So we've got this service agreement model spreadsheet. So again, input the franchise start date, 1st of April 2010, 5-year deal, 5-year agreement, property completed 31st of July 2010, refurb was 3 months, 40 grand refurb, ready to rent 7,500, monthly income 3,600. This has automatically calculated what the maintenance is based on 3%. Utilities were 550. MSF has been calculated, and it's put in a service agreement fee of 20%. You might have a project management fee. Not everybody will necessarily do this, but your limited company could be charging you for the repairs element of the refurb. Let's just say that that was a 10% fee. So 10% of 40,000 is 4,000, and then a house tenanted from 3 months up from when the refurbishment was completed. So that's the first bit. We need to put the mortgages in and the own funds, but there's obviously no rent because under the under the service agreement model, you're not leasing the property to the limited company. So the first mortgage was for 18 months, and it cost £789 a month. Then it went for 21 months at £1,242, and then finally 143 months to get my 15 years in total at 1,342. If we go over to the owned funds, these match the mortgages. So the first cost was 363, the second cost was 202, and let's assume that's the same to the end of the mortgage. So that's all completed. We can see that we've got 15 years of data there. What we then do is we go to the tax years tab, we highlight the personal element, copy it, go to the limited personal split, go to the first cell, we do edit, paste special values, in it goes. Then the same for the limited company, we pick up the limited company from the service agreement model, back to the limited company personal split, edit, paste special values. And you can see that you've got up to 6 houses that you could input. The service agreement model ones are green and the lease agreement models are blue. If you then look at the summary tab, let me just make that bigger for you. You can see now that this has been populated. So you've got a profit and loss account. You can see the elements that you'd expect to see in a limited company profit and loss account, all derived from the data that you've entered from your analyzers or from those highlight spreadsheets. You can input other costs. You'll be able to put in dividends. The spreadsheet will tell you what the maximum dividend might be in a particular year. It'll tell you how big your director's loan account will be. It tells you how much cash will be in the company. And then we've got some data down here. The personal element, the personal split, which we need to transfer onto the tax over time spreadsheet. It's worth going back to the lease model and just highlighting, if we look at the tax years, in this limited company split, you've got something called mortgage top-up. Mortgage top-up is where there's a difference between the rent that the limited company is paying and the mortgages that are being incurred. So you'll see here the individual's getting rent of $5,200 from the limited company, mortgage interest of $6,312, and they've also got interest on an equity release on their own home, $2,904. That adds up to negative, or an outflow of £4,016, which is what this mortgage top-up is. Anytime the sum of these is negative, it will show here. And if we go back to the limited personal split, what the model is doing in the director's loan section here, this mortgage top-up row, is it's putting those numbers in, and it's assuming that you'd use surplus cash in the business to top up your mortgages. The rest of it should be relatively straightforward to browse through, and as I was saying earlier, this will be another one of the tools that we can use at the workshop to help you understand your tax position. So it's really not for now to go through this in detail, but just to make sure that it's populated. So when you've finally you've inputted all your properties onto this data entry tab, you go back to the summary tab, and right down at the bottom for the individual, you can see the elements that would make up the element of your personal tax return for property income. So you've got rental income, expenses, and so for the service model, that's going to include utilities and refurbishment costs, mortgage interest, and your own interest. And what you need to do is go across to the start of tax year 16/17, highlight the rental income, go down to own interest, and then highlight all the way across. And then we copy those and we switch to the tax over time spreadsheet, and again just edit, paste special values and put all that data in. By the time you get to 24/25, your business is most likely in a pretty steady state. So if you haven't got enough data, you can just copy and paste that last year, or duplicate that last year into the missing column on the end. You may remember at the start I said you need one of these for each person in the franchise. So if you've got a husband and wife who are owning the properties jointly, they'll both need to do a personal tax return. Now what we've done here is create this for both people. So this would reflect husband and wife. Obviously it'd be a real headache to go back to the beginning and try and split everything by half, but there's a neat shortcut. So if I go over to this comments box and I put in a half, because what I want to do is change all this data by half. If I copy that half and then I highlight all of these cells here and I go to edit, paste special, what I do is I click values, which will preserve all the formatting, and then I'm going to click multiply, and what it will do is it will multiply everything in those cells by the half that I copied. So if I click OK, there you go, you can see that you've got one individual's worth of data. And what you do is you do File, Save As, and this might be Mr. FP tax over time, and then we could save that, and then we do exactly the same thing again and do Save As, assuming that the split is the same, and we do save a copy for Mrs. FP as tax over time. So both individuals have now got a copy that they can use to start modelling their affairs. And it might be that somebody in the family has got a salary, so at that point you could then come down to the other income box and perhaps add a salary and then maybe a pension. And going down to the bottom of the spreadsheet, their income tax will have been calculated, and we'll at the workshop we'll go through this in much more detail and explain how the calculations work. But really, bringing these spreadsheets in this state of completion would be really, really beneficial and help you get the most out of the workshop. What else might you need to bring with you? If you've got any brought forward property losses, you'd input that figure in this spreadsheet here. So maybe there are £30,000 worth, and that changes how the finance cost relief is applied. If you don't know what your brought forward property losses are, your accountant or the person who does your income tax calculations should be able to tell you. Other income, hopefully you know what salaries and bonuses are, any pensions you might have, any savings income, any dividend income. Remember that dividends going forwards, so from 16-17 onwards, are just as you get them. That's the gross amount. Previously, tax was taken off at source, and then anything else, any other sort of income, and that's it. There isn't anything else to put in. If you've got any questions, if you think that something hasn't been covered, or it's not clear, or we've left something out of the spreadsheet so that you can't complete them as that you'd like, please get in touch with Daniel Coe or Paul Kutchera. Either give us a ring or use the business mentor at platinumpropertypartners.co.uk email address and send us your question, and we'll try and get back to you as quickly as we can. Thank you for your time, and very much look forward to seeing you at the workshop. Thank you.